Europe's biggest banks could face new rules to disclose how much they contribute to climate change. A green asset ratio is being proposed as a key metric to show if a firm is shifting away from financing fossil fuels and towards renewable energy. Well, Alpesh Patel from the private equity house Profinium Partners joins us now. Thank you very much indeed. Could you tell us a little bit more about this proposal and how you think it could work?
Well, the European Banking Authority has only put the proposal forward. There's not a lot of detail at the moment. It's really going to measure, in terms of the total assets that a bank has on its balance sheet against which it's lent money, how many of those are basically green finance and, of course, or climate-friendly, say, loans, advances, other kind of debts that they might have issued. So it is early days at the moment, how it will be measured, how it will be valued. But it's an exciting move. And of course, after the financial credit crunch in 2007, this whole idea of having asset ratios over banks has clearly caught on.
So really exciting, really positive. But can banks make it work without harming their business model?
Well, I suspect they will find a way. When have you known bankers to knowingly not make a profit unless they get shocked by the financial crisis? And of course, it comes off the back of what Citibank's new CEO, Jane Fraser, said yesterday, that they're going to make their bank net neutral, net carbon neutral. So they clearly think that you can make profits as well as have this broader purpose. And of course, JP Morgan have said they're going to commit to investing $200 billion by 2025 to finance clean energy. BNP Paribas have said they're going to stop investing in companies that make more than 10% of their revenues from, say, coal mining, as well follows on the back of Societe Generale having a similar remit. Wells Fargo have also done a similar thing where they've said they're going to heavily invest in renewable energy. So you're seeing this massive coordinated shift. Well, I say coordinated, maybe coincidental shift, but certainly in the right direction amongst all these banks. And if they're all doing it, then it would suggest that the business model will work and they'll find ways of doing it.
Does it go far enough, though?
In and of itself, of course not. Given the size and scale of the problem, and most famously and most recently, Bill Gates has highlighted this climate change problem, it's going to almost certainly require United Nations involvement. It's possibly going to require legislation from domestic governments as well. And don't forget, this was just the EU. What about non-EU banks? What about American banks? I've mentioned Citibank already, and they all seem to be, like JP Morgan and Wells Fargo, going in the right direction, but there's a heck of a lot more to follow. So it's a good start. It definitely signals it's the direction of travel. And you'd loathe to be either in banking or any other industry and say, oh, we're not getting with the program. I think it means a lot of boards from right across all industries will be looking at this and saying, we need to be on the same agenda. And that's really the important signal of it. It's that leadership to get others to copy, because quite frankly, you're almost ashamed not to copy in this direction.
Right, and Alpesh, you mentioned the American banks. Should this be adopted really worldwide with binding legislation to really make it effective?
I think it's going to be necessary to do that. We've seen that the carrot approach alone, whilst good, and of course you'll remember carbon credits, 30, 40 years ago when they were invented, were supposed to be the problem with the ozone layer and stop global warming. Well, it didn't really work out like that. So I think it's going to be partly making sure the incentivization method is correct and efficient and constantly being improved, but also there will need to be legislation. Obviously, some governments have already initiated that legislation and said this is what we absolutely have to do to sort of bind themselves, because it's very easy to try and get away from it. But it only needs a financial crisis for them to have an out and an exit and say, well, except in exceptional circumstances. And that's always the worry.
Alpesh Patel, thank you very much indeed. Great to have you with us.